Folks, we've got so much to talk about that your head is going to spin completely off, and I will not be held liable if it does. Number one, the GNS short squeeze play made the anticipated new breakout today. Really fascinating setup that I want to discuss with you. Squeezy McSqueezy, what's going to happen next? Number two, we need to talk about a massively exploding stock that has a similar criteria and setup. And then finally, number three, I have some other small cap trade ideas that are just starting to detonate, be little detonatey that I believe that you really need to know about, and you should probably know about them before tomorrow's market open. Okay, so today I actually want to start with something a little bit light. I want to start with a moment of silence for hedge funds short selling small caps right now. This has been a horrible start to the year for them, and studies show that every single day that goes by, another short seller can't afford yacht payments or alimony to their 3 ex-wives. Think about all of the industries that are going to be negatively impacted by those ex-wives not getting those payments. Hermes will have excess inventory. Pink Porsches will sit unsold. Plastic surgeons will go out of business. Those losses that the hedge funds took could have gone to a new set of knockers. There is a legit human toll here, and anyone who doesn't acknowledge it should be disgusted in themselves. In fact, today I am calling for the start of a new organization. I think we need a PETA, but for short sellers. People for the ethical treatment of shorts, because quite frankly, short sellers are just getting used and abused, and enough is enough. Please keep short sellers in your thoughts and prayers during the Squeezy McSqueezy season. Okay, moment of silence over. Let's get to work. So I said GNS was a bad girl, and people said, oh no, Charlie, she's a good girl. She's good. She's not going to move or rock the boat much, but here she goes today with another rallyto and a higher high. So, bad girl confirmed. Now for context, we briefed on the lovely GNS last week at about 70 cents, and it ran to 545 at highs and now 628. And the reason we briefed on it originally was because they were launching this new trend of small caps fighting against short sellers. This is a very contagious trend for several reasons. The first reason is that if you're a small cap CEO and you see other companies announce that they are fighting short sellers and as a result see a massive increase in their stock price, well, that's a huge incentive for you to go and do the same to your company so you can get the same rallyto. The second reason is that if you're a small cap CEO, odds are strong that your stock has been beat down like a rabid dog in this market condition. So by going and announcing an investigation into short sellers, what does that do? Well, it takes the blame off you. You can go and you can blame the short sellers for your bad performance instead of just the macro conditions that are destroying your business or overspending or over leveraging, which is why I think this is going to be a very contagious trend. You're going to see a lot of small cap companies go and say, hey, wait a second, this is a win-win. Let's just announce that we're going to investigate our short selling. Now, one reason this is actually even better than that is because if you're a small cap and you want to win a battle against short sellers, you need to limit your dilution. If you go and investigate short sellers and then dilute, it looks bad and you're like super wishy-washy. You say you want to fight back, but then you're going and giving the enemy more ammo to attack you. So that's another reason why traders are seeing these as such good opportunities to ride waves. But the way to judge whether a hype rally on an individual stock investigating shorts is going to continue is by looking to see how much coverage and attention that stock is garnering. And so far, GNS is leading the way in that. GNS has had the advantage of being one of the first movers in this particular trend and having a very loud CEO. This morning, I opened Market Watch and I saw, quote, small cap companies are going after naked short sellers in growing numbers. It's the biggest risk to the health of today's public markets. And then what do you see in the article? Genius Group got the ball rolling last week when it said it had appointed a former FBI director to lead a task force investigating alleged illegal trading in its stock that it first disclosed in early January. Genius CEO Roger Hamilton told MarketWatch on Friday that it had evidence that bad actors had cost the company dearly. And he's not talking bad actors like Ryan Reynolds. He's talking bad actors who do bad things. We want this to stop. They are taking value away from our shareholders. They're predators. They're doing something illegal, and we want it to stop, whether that means getting regulators to enforce existing regulations or put new ones in place. So what is the implication being made here? The implication is that GNS would be trading far higher if short sellers weren't involved. The other implication is that short sellers may be overshort this and easily squeezed out if enough people bought in. Now, I'm not saying that GNS is worth more than its current price fundamentally. All I'm saying is that this is a very powerful trend right now. And if the momentum continues to compound, oof. You see, the bigger this overall short selling investigation trend gets, the more people reflect on that first mover in this cycle, GNS. Every single stock that announces an investigation from here on out, the media is going to reflect on GNS, and that's going to draw even more eyeballs to the stock. That's what we've seen week over week, and I continue to expect that to be the case. GNS had a massive leap and then a breathing cycle, and now as I shoot this video, we are in the process of seeing where it falls from the newly broken out highs. But I think the next leap is going to be substantially crazier than the previous one just because of all the attention that it's getting right now, like multiples of what it did during the previous leap cycles. And I want to be clear here, as far as I know, we here at ZipTrader, and specifically ZipTrader U in the daily morning briefings, were the first to call this out, way before the rest of the media started talking about it. Even our reflections on our call out was before most of the people covered it. And the only reason that I'm saying that is not because I want you to think I'm a magical little garden gnome, although that's also true. I'm just a little bit taller than a gnome, but also to, as always, emphasize that waking up and putting in the work and following trends and tracking catalysts, well, that is what pays off in the end. If you do not put that work in, do not be surprised if you only find these after they've already massively run. And of course, speaking of GNS and our pre-market research, our GNS 50% off coupon code on ZipTrader U is still on. I said yesterday, if GNS doesn't make a new high in the next 2 days, then we will expire its namesake coupon code, and this bad girl just had to go and make a new high today. She's really bankrupted me with all these cheap ZipTrader U memberships. Hopefully she can stop making these damn new highs. Next, Verb. Now, I know you're not surprised that Verb ran this morning because there's always more action in verbs than in nouns, but nonetheless, this morning, the first stock we briefed on was the lovely Verb. We briefed on it at about 34 cents, and it ran to 58 cents, which is about a 70% increase. But why did we brief on it? Well, because it followed our trend rule. The day of yesterday, I said the number one play this week are stocks that announce short selling investigations. And Verb went and announced that they're going to be evaluating actions to address suspected illegal trading of its shares. The company suspects there has been widespread trading activity that artificially depressed its shares. As Verb's board contemplates the formulation of a comprehensive plan of action to address this activity, the board is evaluating several options, including the engagement of forensic experts, as well as working in collaboration with other listed companies and their counsel that have identified similar, unusual, and perhaps illicit trading activity in their shares. So this catalyst here teaches us a few things, and there's a few different takeaways. It teaches us that not only do firms that investigate their short sellers get massive runs as a reward, but also firms like Verb, which simply are saying they're thinking about investigating short sellers. So this further proves my thesis that more and more companies are going to jump on this trend because you get an instant reward, and the barrier to jump on the trend is very, very low. I'm telling you folks, we're going to see so many companies doing this in the coming 2 or 3 weeks. If you're a CEO right now, you got to be thinking, okay, if I just say that I'm looking at the short selling situation, whether there's short sellers there or not, I could get a double in the share price. And if there really are a lot of short sellers, then all of a sudden maybe that causes a massive squeeze and your stock goes up 300-400%. Of course, at the end of the day, it's going to go down massively, but who knows what you can do when the stock is up that much. And ironically, actually, as I was editing this video, Verb showed us exactly what they could do when the stock is up that much. Offering. So I mean, hey, I guess not all short squeeze investigation runs are going to be without their random dilutions. But I do think that they're less likely to see immediate dilutions, especially if they're actually hiring a team and are really serious about going and investigating the shorts. But we'll see. Next, HLBZ. So HLBZ is essentially a money-losing scooter rental company. This is one of those companies where I'm looking at it and I'm like, okay, I see the shorts point with this. But at the same time, I mean, if short sellers are naked shorting this, that's never justified. And by the way, I know I say things that are bad about shorts all the time, but I don't really have a problem with short selling per se. I have a problem with naked short selling. And if there's a lot of naked short selling here, which is what is alleged, then this stock may have a lot more to rally. And that is what HLBZ is looking into and may end up spurting as a result. For context, HLBZ announced their investigation into illegal trading of their stock, and we originally briefed on it back when it was trading at about 18 cents last week, and today it hit 48 cents at highs alongside GNS's run. They actually hired the same firm as GNS to investigate their naked short selling, so I think the link between GNS and HLBZ's runs is going to be very, very parallel. As it was today, I mean, they both broke out at like the same time. My thoughts on HLBZ, well, after this momentum cycle breathes, you're going to see another opportunity in a dip, and then you're going to get yet another new high. That's my prediction here. Could be wrong. I've been wrong many times in the past, will be many times in the future, but that is what I am thinking. Also, quick bonus, there's a new petition asking Mullen to join the short seller investigation trend. That would probably be quite the positive catalyst for the stock, so keep that on your radar as well. Finally, a recap on Inbs. So the third criteria we had yesterday was FDA approval and or other regulatory biotech catalysts or things that push it in that direction. Inbs fit that bill. We briefed on Inbs at about 73 cents and it ran up to 160, which was slightly more than a double, about a 119% run. It was actually up a decent amount when we briefed on it, and so I was surprised it had that much more room to run. I mean, I thought it would run a little bit, but in any case, we are in a very, very ripe small cap environment, which is why I like to always remind you, hey, we can't always find these good kind of plays. It really depends on market condition. But of course, preparation meets the lucky. Wait, actually luck favors the prepared. There we go. When you put in the work and show up every single day, you're bound to find a lot of good opportunities. And you wouldn't be able to find those if you weren't showing up every day, right? Because they don't always come up and they're not in every market condition. Right now, you're in a massive squeezy McSqueezy condition, and we've been putting in work for a long time to be able to find these types of plays. And now it's paying off. But what was the catalyst here? Well, we said it was attempting to break new highs in the pre-market after posting improvement in biosensor platform development. And it not only attempted, but it took that new high and continued running into the day. The CEO said, quote, "We are thrilled to have reached another key development milestone for our biosensor platform, particularly demonstrating a substantial TTR reduction from 120 to 30 cents, far below our original target of over 1 minute per test. Based on these successful results, the biosensor development team has now proceeded to its next testing phase, which will include testing human saliva." So the market's like, okay, these people, they're going and they're moving on, and now they're going to be testing their product in spitballs. Very, very bully bullito. So what is the lesson here though, folks? Well, watch out for any catalyst that leads to a higher likelihood of a biotech stock getting through the regulatory process and eventually making it to market. Remember, small biotech stocks, their entire valuations are based on their ability to get through that damn expensive pipeline and actually get their product to market, get that final FDA approval, and then start marketing to people and then sell it. Every single time they pass one of those steps, it's going to make people think that it's more likely to get approved, and thus, boom. And so if you can follow these stocks as they go through the FDA process, well, you could have a pretty fun game ahead of you. Now, this is the full list from the catalyst section of today's morning briefing. I recommend taking a picture of it and following up with many of these tickers over the coming week because I believe many will have residual rallies, especially the investigational short squeeze stocks. Also, I obviously always like to hammer in that fact that not all briefing plays are going to work, and a lot of it depends on market condition and the level of preparedness meeting luck. But the point of our briefings and your own briefings that you should also be making if you're not a member with us is to do the research every single morning, identify the trends, write them all down so that you can track them, and of course narrow down the tickers that you think are the most likely to have opportunity. You know, if there's thousands and thousands of tickers in the market and you can identify, say, 10, or in our case, usually 5 to 7, then all of a sudden, hey, you're on the first page when one of them runs. Anyways, folks, that caps off today's video. I hope you found a lot of value in it, and I'm not going to plug ZipTrader you again, but if you are going to be joining us for the morning briefings tomorrow, remember 30 minutes prior to market open. Coupon code GNS will be active until this stock stops making higher highs. And then after that, I'm going to be shutting up about the coupon codes until at least Valentine's Day. Have a good one, folks. I'll see you in the next video.